Welcome to AAA Professional Institute one more time. In our previous classes, we have taken common size financial analysis and we are taking trend analysis. In this class, we shall be taking the last one, which is called the comparative financial analysis. Comparative financial analysis. Now, comparative financial analysis is taking comparative financial analysis, meaning that the analysis is done by comparing the financial statements of an entity with the financial statement of another entity in the same industry. The financial statement of an entity A's financial statement, for example, entity A financial statement versus entity B's financial statement, and both of them must be in the same industry. That's industry-based analysis. That is industry-based analysis. That's you use the financial statement of entity A and compare it with the financial statement of entity B in the same industry. What you are doing is called comparative financial analysis. That is number one. This is industry-based. We call this one industry-based. Industry-based analysis. Industry-based analysis. Okay. The next one is we can have the departmental-based analysis. Departmental-based analysis. Departmental-based analysis. That is, you compare department A. Compare department A versus department B. In the same company. In the same company. What you need to understand here is this, that anytime you want to compare, there are rules. When you want to use comparative financial analysis, there are rules. The basis for comparison must be established. That's number one. I will take us to, what's it called? I will take us to one of these case material that we're using now. The basis of the comparison must be established. That is, for example, if you are saying the sales of Department A versus Department B, they must have the same provisions. They must have the same provision, and they must always have the same, criteria. For example, the location of Department A, the features in the location of Department A, that's location. The features must be the same as the features in the location of Department B. Location of A versus location of B must be the same of B, because if they are not the same, you are not likely to have the same basis, an established basis for comparison. And the same thing is applicable to entity. The entity's location must be the same, must have same feature, not the same, but same feature as entity B's location. Okay, I hope this is clear. That's number one. Then the availability of material, of resources, must be established also in both places. Like here, entity A's availability of material must be the same thing as availability of material in B. Okay, I hope this is clear. There are several factors. There are several factors that you can use to analyze, but you must have them the same. You must have the same features in the locations. They must have the same features in the location in the industrial base and the departmental base. Okay, the third one is actually basis of comparison. Is actually, you can use the one we call year on year. You can use year on year basis for the same company. For the same company. the same company. Now, what do we mean by year on year? Just like the case material that is displayed on your screen now, we have Spicy Restaurants Limited. We have the income statement. We have the financial position, the statement of financial position, and we have the income statement for Spicy Restaurants Limited. Now, if Spicy want to compare, for example, like we mentioned in our previous classes when we were talking about common size and we are talking about trend, the income statement has 3 years. The income statement has 3 years, which is 2016, 2017, and 2018. Right. Now, what they want to do is they want to compare the movement of fund, the trend. How was their performance like? That is what they are trying to do. You understand it by putting this together. And again, the rule says that whenever you are publishing your statement of, you must put minimum of the preceding 2 years as a basis of comparison. You understand it? As a basis of what? Comparison. That is the one we call year-on-year basis for comparison. Remember, the topic we are treating is comparative financial analysis. That is, you can use departmental like this one, you can use industry based, and you can do year-on-year. You can go ahead and do quarter to quarter, quarter on quarter rather, quarter on quarter, number 1. Number 4, quarter on quarter basis. Now, for some of us that are familiar with bond or what's it called, stock market that's been displayed on TV, you understand it. You'll be seeing what is called YO, small letter Y, small letter O like this, something like this. That is what they are trying to. That is, it's called year on year. It's a basis of comparison. You understand it? So you can do quarter on quarter. You can do month on month. Now that is the way you do preceding month versus the current month, or preceding year versus the current year. However, you can also do the current month, let's say January 2018, you can compare it with what happened in January 2017. That is another one that is called month on month. That's another. You can do quarter on quarter, year on year, etc. And that is what we mean by comparative financial analysis. Now, at this point, I think we must have gotten the message here. And if you need more analysis, you can just go through the financial statement that is displayed on your screen and compare the values. You can compare the values of 2018 net current asset with 2017. What is the performance? Are they growing? Are they not growing? In fact, let's take one example before we round up the class. Let's take one example. We'll use the non-current asset, NCA, the non-current asset for 2018, 2017, and 2016. Okay, what are the values of non-current asset for 2018? We have 126,996. You will see it displayed on your screen, and you can be following me through it. 134,429, and we have 136 what 927. Now, if you want to do, let's for example say you want to do year on year comparison. Year on year comparison will say you compare year 2016 with 2017. Now, what does it mean? It means that compare what is the difference between 2017 minus, just like the way we treated the absolute figure in our trend analysis, minus 2016. This is what you are going to do. And what's the value of this? That is 134,429 minus 136,927. What figure are you going to get here? You are likely to get minus, that is the negative, minus 2498. Now, if you want to talk about this now, it means the non-current asset of Spicy Restaurants Limited decreased by this value. That's the meaning. That it decreased by what? By this value. That's the meaning. Okay, that is what you are trying to do, is year on year comparison of the financial statement. Okay, let's look at the one for 2018. Let's look at 2018 minus 2017 now. 2018, 2017, we have 126, 696 minus 134, 429. Okay, what will this give you? This will give you a negative also. Okay, that should be minus 7,733. Now, look at what is going on. If you want to do your analysis for, assuming you are a consultant to this firm, Spicy Restaurant Limited, and you want to do your analysis, you are likely to advise them that your non-current asset is decreasing on an increasing rate. Please underline that word. For the student that want to do exam, write this forthcoming exam. When you want to state it, you can state it in this manner. Say, the non-current asset of Spicy Restaurant Limited is decreasing. Let me write it down. Is decreasing at an increasing rate. That is, it decreased from 2016 in 2017. It further decreased in 2017 to 2018. Now watch. If it is a non-current asset, if it is a good thing, you let the institution know, the company know that it is a good thing that this is decreasing. But if it is a bad thing, for example, if your expenses is increasing, you are supposed to actually advise that these expenses should be cautioned, or the cost should be well managed, to have a good report. Okay, I hope with this few example you have really understood what I meant by comparative financial analysis. Please follow us on all our social media handles, and subscribe so that you can have more lectures and we can have a wider coverage. We appreciate you. Thank you.